Welcome, everyone. Super excited to have everyone joining. We're just going to let some folks roll in here for a few seconds. We want to get you in and out on time. We know everyone's busy, and we're super excited to have you here. We have an amazing topic today. This is really something that you don't see a lot, or at least I don't see a lot, and that's why I was so excited to bring this to you, and the team was so excited to bring this to you today. But we're going to show you what really happens inside an acquisition, and it's going to be from both sides of the table. So we have the founder side represented, so folks who have had their companies acquired. And then we have the corporate development side, so the teams within these bigger companies who are going out and doing these actual these acquisitions. And I'm super excited about it because it's something that doesn't get a lot of airtime, at least in this way, with this combination of folks. And so let's quickly dive in with some of the details. First of all, I just wanted to mention if you're not familiar with Venture 5, we're the venture capital industry hub. We're spanning three different arms. Our first arm is media. We're creating content such as this about venture that empowers. We're also improving access to capital for founders and funders through what we call Catalyst. And then we build products and services that solve real problems for the venture ecosystem. And that's our studio. And you can go to venture5.com for all of that and more. Also want to give a huge thanks to Bill.com for helping us bring this to you today. We have Jeremy on our panel from Bill.com. He's a founder who exited to Bill.com, which is super cool. And Jeremy, do you want to just talk about Bill.com?
Yeah, absolutely. And thank you, John. Um, here at Bill, we empower small businesses and accountants with complete visibility into your payables, your receivables, your spend, your expense. So you can really take control of your financial operations and run your business with confidence. The latest is, delete busy. We spend so much time on just getting the finance done and making that as simple as we can.
Awesome. Thanks, Jeremy. And I think myself, as well as a lot of folks who are watching this today, are probably logged into Bill.com either to issue a bill or to pay a bill. So it's really cool to be working with you all on this. Manali, if we could switch to the next slide, let's do some intros. Jeremy, while we're here, why don't you give a little bit of background about how you came to Bill and you know what your role is there today after the acquisition?
Yeah, no, absolutely. So I was the co-founding CTO of Finmark. We made it simple for small businesses and startups to forecast their future, test drive your business, make sure you know what you're doing with your money, and simplify things between you and your investors. We were acquired back in November of 2022. Came into Bill, Senior Director of Engineering. Currently over integrations, cash flow management, and taking a big step into AI agentic workflows for our customers.
Awesome. And let's go down the line here. Scott.
Sure. Yeah. I'm Scott. I've been Datadog 10 years, started the corporate development function here about 8 years ago. Actually came to Datadog through an acquisition. Datadog's first acquisition was a startup I worked at called Mortar Data. Brought me in back into the fold here at Datadog. Yeah, seen the whole spectrum from when we were doing our first early acquisitions to what we do now as a public company, acquiring awesome companies like Metaplane.
Fantastic. Kevin, that's your cue.
And while Scott is an OG, I've been at Datadog for around 8 months since the Metaplane acquisition. I was the co-founder and CEO. We started the company in June of 2019. Um, we would call ourselves the Datadog for data, but it turns out that the Datadog for data is just Datadog, and I lead the data observability product at Datadog now.
Awesome. Fantastic. I'll share a little bit of like Datadog personal history, at least that, you know, I was not at Datadog, but I remember meeting Scott when he was at Mortar Data. The one of the founders' name was Kay Young. And yeah, I remember meeting Scott. It was like about 10 plus years ago. So it's been really cool to like reconnect and work on this. But I also remember sitting in a restaurant in Manhattan and looking over and seeing Olivier, who's the CEO of Datadog, at lunch with Kay Young one fine day. And little did I know that a few months later, that Mortar Data would become part of Datadog. So kind of a cool full circle moment and really, really excited to be here. So yeah, why don't we get started? I think Kevin, for you, in terms of this acquisition, you're less than a year in. How did it sort of go down? I know it's probably a sort of a long process, but maybe just like the high level of sort of how everything happened would be really interesting to understand at a high level.
Well, it started like all good relationships with someone sliding into someone else's DM, I suppose. If we really go back, that we someone from Datadog Corp Dev reached out to us at Metaplane, and we met some folks on the product team who were interested in data at the time. I think Scott can speak more about like that team and the product and how that's evolved at Datadog. But we had first contact, shared what we were working on, sharing our demo. Um, we kept in touch about a year later when we were raising our Series A. We were talking with Datadog as well. We didn't quite join forces at that point, but about 1 year after that, uh, the current acquisition process got started in earnest. And we brought it to the finish line in April, uh, like this past April. So on the whole, the process, we were in talks to make an acquisition happen for maybe about 2 years, which is longer than the acquisition has actually been.
Okay. And Scott, from your perspective, how did you sort of see the story? What happened prior to that outreach from your team? What sort of caused that? What spurred that?
Yeah, so there was the initial outreach was I wasn't involved in that conversation, but the subsequent one around the time they raised their Series A, we met them sort of as they were having those conversations, and candidly, we made a really hard push to try to acquire the company then. Um, Thought there was a really great fit with Kevin and his team and what we were trying to do, but couldn't quite get things to align at that time. And then just stayed in touch over the course of the next year and a half or so. It worked out that Kevin's now wife lived around the corner. Her family grew up is right around the corner from me, so we would see each other in Boston, and I would come to New York, and I would make a chance to see Kevin. And so we just, I think there were a lot. We always got along really well, and thought, hope that there would be an opportunity for stars to align in the future, and eventually. Kevin was ready, and so we were able to kind of re-engage at that time.
Nice. And Jeremy, for you and your process as co-founder of Finmark, was it sort of like a kind of an outbound from Bill, or how did that all sort of start to take shape for you? And what was that like timeline from like first contact to, hey, we're acquired?
Yeah, it's an interesting answer because as the CTO, my co-founder and CEO was doing a lot more of the outbound. Um, but we were actually just looking to raise a Series A, right? We had been running for a couple years at that point. Our customer numbers were going up. We were getting closer to metrics for a good Series A. And I just get a note one day from my co-founder, just like, hey, we have a meeting coming up with Bill. Um, could be a big, business opportunity for us. Our customer segments align. Let's really make a splash. And I'm like, great. I get my engineers on. I'm like, those things on the backlog that we've really been wanting to do to, really excite people. We have 2 weeks. Let's make it happen. And took a call, and I want to say it was within, maybe 2, 3 months, there was a letter of an intent, and it was a very quick process from there. And quick, not because of a lack of work, but we wanted to push quickly to close it out as opposed to raising the Series A. So, you know, start to finish, it was, I think, 6 months from my vantage point.
Okay, interesting. So some commonality there around that Series A, sort of time frame. Scott, why is that? Have you seen that across other deals that you've done at Datadog, or how does the fundraising dynamic play into the M&A dynamic?
Yeah, I mean, I think every founder who looks at raising another round has to think about, okay, well, what kind of outcome am I signing up for? What sort of dilution am I going to take in this next round? And, how does that compare to, if I have an acquirer that I'm potentially excited about selling the company now? I'm going to take on this additional dilution. I'm sort of promising, or at least going in with an understanding that these new investors have an expectation that we're going to, return, make a big return on their money. That's, of course, raise it a higher valuation in the case of a new Series A, Series B, whatever it is. So I do have a lot of conversations with founders right at that time where they're saying, "Hey, look, we may go down this path, but want to explore both in parallel." And in some cases, they decide that they're ready to double down and want to see as Kevin put at the time, more another card turnover. And in some cases, they feel like, hey, now is the time. I think everything's are coming together, and we're excited about joining Datadog and doing what we can do here together. And they decide to go down that path. But sometimes you don't actually know until you pursue both, fairly seriously, and kind of can see both options laid out in front of you.
Kevin, how do you sort of it's funny, like you think about startup pitching, you're pitching to raise your seed round. Like I imagine you're probably pitching like this big vision, right? We're going to build this multi-billion dollar company. But the reality for a lot of founders is like, well, if there is an exit, right, it's usually via M&A. So how do you kind of manage your investors' expectations in terms of like that fundraising piece? And then, well, by the way, Datadog came, inbound to us. We've been getting to know them for a year or two. Maybe we should talk about this kind of in parallel. So how did you navigate that, and how did you work with your board and like main investors on that?
Well, there's two tracks to answer that question. I think one track unifies the two, which is your fiduciary responsibility, which is, founders, everyone is so different, every opportunity is different, but we get in the game to make a big impact, right? But the problem is that you have to play the game as it's on the board. And sometimes opportunities close, sometimes they open up. And if it turns out that the chance of your startup going the distance, which is what everyone in this room wants, everyone wants their for their portfolio companies, if the probability of that is going down and the probability of another exit is going up, I mean, you kind of owe it to yourself and your investors, I would say, to have conversations with potential acquirers, given that it doesn't distract you too much, right? So the way that at least we framed it is these conversations, right? People are reaching out to us. We don't want to close the book on them, even though some people do recommend that, right? We want to kind of like keep all of our options open so that we are right playing the game on the field today. On the personal perspective too, I would say, and I'm curious, Jeremy, how you all navigated this, is that some people are, burn the boats kind of founders. Like, this is going to be $100 billion IPO, not talking to anyone. Personally, we're more in the camp of like, let's be realistic. This is not our only time. Like, this is not our only startup in us,
Hmm.
right? We got to make the best choices. And that means having choices to start. And that means having these relationships at all. But yeah, I'm curious, Jeremy, how y'all balance that.
Yeah, well, what's interesting is, when we started talking to Bill, um, initially, like I said, potentially just partnering, providing our product to their companies, and creating an integration, those types of things. I'm really just looking at the customers, right? Like, what is this change going to mean for our customers, and what is this going to mean for our product moving forward? What kind of opportunities do we have together? Now, when it changed from, potentially partnering in some way to potentially an acquisition, my first thought was our employees. Honestly, it was, we pulled in people that we had all worked with before. We had grabbed people from our network that we trusted, that we knew, would work hard for us. We would work hard for them. And the first thought was, is this a good place to land for our employees, right? We can either, go ahead and finish off the Series A. We're going to have plenty of runway. We can hire more. We can really, shape that hockey stick. Um, what's that going to look like over the next, 2 years? Now, if we land the plane, and this is where we're landing, what is that going to mean for the product we've built? What's it going to mean for the employees? What is it going to mean for our customers? And, you know, everything just matched to the point where, you know, it seemed like an obvious answer. There's so much synergy in kind of the market that we were hitting on the problems we were solving to where for the customers, like this is an amazing win for customers. For the product, like we now have more eyes than we can imagine because of the scale of bill. So for the product, it's amazing. For our employees, startups cannot do for their employees what larger companies can do for their employees. And when you join a small startup, you know that. And you're looking at the equity as, okay, well, this is why this is okay, right? And so you just put all those things together and it's like values align, customers align, the product's going to be beneficial. And I think my employees are going to land in a place that fosters the same culture that I'm looking for. Like, this is great. Everybody wins. Investors are happy, customers are happy, employees are happy. Let's do it.
Scott, how do you or how can a founder sort of accelerate to getting to that happy place where, Datadog or someone, a large acquirer is taking like a real close look? Obviously that Series A, raise, maybe that's kind of an event that can cause some urgency. Are there other things that you've seen that either founders can do or just market dynamics that might all of a sudden mean like, hey, we got to move fast in terms of there's a company or maybe a few companies you're looking at in a certain space where like we have to go and like we have to acquire now.
We're pretty deliberate about looking at new areas constantly, and of course, some of those end up in us deciding that it doesn't make sense. But once we get down the path of like, hey, we want to do something here, um, we've had a lot of success, fortunately, with M&A when we decide to get into these new areas. That is where we usually start from. It's through our team. So, once we get to that level of conviction, then it's a exercise of trying to find, the right company that will fit well with Datadog specifically. I think similarly the way we do about products, that we think culturally will align well. I think they're motivated to build something great as part of this next chapter. So, from there, what's getting us excited is the interactions with the team. Like in some cases, we have like a longer lens on things. So with Kevin having interacted previously, we got to see the delta between, our first interaction, the demo we saw then, and the, trying the product then, and what we saw, a year or so later, and had a really good lens into the product velocity. So that was really another thing that got us excited. So it's more just about we try to move pretty darn fast in general towards those things that we find most interesting. But I think the interactions with the team and the alignment on how we feel about what we want to do together. And then in Kevin's case, it wasn't just a single point in time, but we had sort of an ability to track the progress. That all together made it much easier to get comfortable and not have to kind of spend a lot of time thinking about, hey, does this make sense or not? Is this the right company for us or not? We had a lot of data points to go off of at that point.
And how can I even get on your short list, right? So let's say, there's some product strategy around, I'm going to make something up, cybersecurity. So let's say that lands in your lap. Like, how do you actually build the short list of these are the companies that are interesting to go after in that space for whatever reason versus, maybe these other ones aren't? Like, what's the process that you go through to come up with that list? Because obviously there's so many companies in every different space. Like, how do you decide where to focus?
Yeah, I mean, once you get to, specific areas, like we'll use data observability example because Kevin's company, like there are only so many companies there, and it's not a short list, but it's they're findable, all right? So, you try to go through every angle you can. A lot of it is reading about a lot about the industry. A lot of it is knowing the relevant conferences. So like in Kevin's company, of course, they're going to the conferences for companies like Snowflake and Databricks and the like. So you're starting to see folks pop up there. You can find these companies in a bunch of different ways pretty quickly. Actually, I find it that's a relatively easy part. Occasionally, you find a lesser known one that's just under the radar, but in Kevin's case, he wasn't exactly quiet on talking about his company, and so they would come up a bunch. I think also pitching themselves as Datadog for data observability also made it very easy for VCs that we would chat with to mention the company. And VCs, by the way, can also be a great source of information about interesting companies that may or may not have gotten to our radar. So yeah, when I find an area I'm interested in, of course, I'm doing all the usual online stuff. I have regular catch-ups with lots of investors, and I'll tell them I'm pretty open about what we're interested in, and that will generate some ideas there. Even sometimes from companies that aren't necessarily squarely doing exactly that thing, but maybe the team has a lot of relevant skills to go build in that area. But the most important thing is just interacting with those companies directly, and so we'll reach out cold and have those conversations.
Jeremy, you clearly Finmark made the shortlist for Bill.com, right? I don't know if there were other folks they were talking to at the same time, but clearly you were the winner, if you will. You talked about the 2 weeks, right? Where your CEO is like, "Hey, we got this inbound from Bill.com," and then you go to the Eng team and you're like, "All right, like let's go on like a 2 week sprint and build some things that are going to really impress Bill.com." Take me in that sprint planning or into that, sort of room, if you will. Like, what were the things you were like, we got to push this out, we got to get these features shipped, and why did you pick those in the context of why Bill.com was looking to maybe do a strategic partnership or even ultimately acquire you?
Yeah, absolutely. It was something that my co-founder had said while we were having the conversation. He said, "Hey, they saw our dashboard, they loved it. It makes it simple to see what's going on." And I'm like, "Dashboard. Okay, well, what's shinier than you land on something? Are you wowed immediately?" Right. And, we had been talking for quite a while. Every product has a dashboard of some sort, right? You land somewhere, it's showing you the most important thing to know right now. Um, but a lot of products, you land on a default dashboard that is, the best the company can do at assuming what you're going to need. Um, and we've been talking for a while about, we need to set up custom dashboards, multiple dashboards, so you can set it up for, I just want my marketing view, I just want my sales view, or I want my overall view, but I care more about my CAC payback than I care about my current cash runway, right? So I want to take charts and I want to move them. I want to resize them. I want to change what type of visualization it is. I want to change how it rolls up at a quarterly basis, whatever. And so, I heard, hey, they were really excited about our dashboard. I'm like, well, we can make them much more excited about our dashboard. And so I sat down with the team and I'm like, here's the thing we've been talking about. How long is this going to take? And they're like, I don't know, maybe, depends on how far obviously we go, but I bet you we could have these pieces out tomorrow, these pieces out 3 days, these pieces out. I'm like, awesome. Let's stack rank it, just start pumping them out. And, we'll see where we get in the next 2 weeks. And, we ended up going much further than we intended in that 2 weeks. And it was super exciting, but it was taking advantage of the velocity of a startup and just, the unity of a smaller team, knowing exactly, what we're driving towards, why we're driving towards that thing, and just executing and getting it out the door. It was really exciting.
So with the
And
team,
Kevin, I'd
oh,
love to
I'm
know
sorry.
if you guys have done something similar. You knew you were already talking to Datadog for a while. Was there a hard press to, slip a couple things in before that meeting, or was it, hey, let's just show up with what we got?
Maybe we should have. The way that, but there were some features that I think had a very similar impact. Where it, like you said, like, not only is impressive to customers, but really paints the team in the strongest possible light, and makes it so that um we're kind of on the same page, our team and then the existing Datadog team. One of those things was uh monitor recommendations. So at least
Mm,
in the observability space, one of the big questions, as I'm sure you're familiar with, Jeremy, is this is great if I know what to monitor, but what do I monitor? That's a big question in data observability. and something that we put a lot of emphasis into that ended up being, something that we talked about in our discussions with the product teams quite a bit.
I actually think that's like something that I tell founders a lot is like I wouldn't necessarily say you have to go build something, although I think that's obviously the best and highest version of this, but really have a point of view about what it is that you bring in the company and how things might fit within the new company. Um, and you may be wrong. It's hard to know everything that's being discussed inside the walls that hasn't, gotten to the point of being public facing yet. But it's much easier for someone to react to what you have to say and perhaps maybe even see a path forward that's slightly different than rely on them to come up with it on their own in the midst of their busy day. So, when Kevin comes in and talks to the leaders and the product areas that he now works with, it's so much easier if they can kind of have something to react to that says, okay, like we've thought about a bunch about where this might fit. You also learn a lot about the product of this company potentially acquiring, and also the founders and how they think through that process. It makes it much easier to think about what's the joint future look like, which is ultimately where all the value comes. If you have to squint too hard, if you have to think too hard, you're just creating more, you're leaving more room for friction or misunderstanding about what the possibilities might be. So I often recommend to founders, like, put some thought into, look at the products that you think are the most likely upsells. Like, your product's going to be a new upsell from some existing Datadog customer. What product is it? What are they going to see in that screen that gets them to go and use this new product? What are the things that might be on their mind? And, what are the things that you have to help coach through? Like, are there new buyers, new personas that are in play, and how does that factor in? And really spend some time thinking about it. It actually doesn't require a tremendous amount of time, but I'm surprised how often people just show up with a generic demo. I think putting that a little bit of thought in there, tailoring the demo, tailoring the talk tracks, maybe having and sending a note ahead of time with some, hey, I'm not even sure if this is exactly right, but here are a few things that I'm thinking about. Happy to expand on them further in the call. That I think that goes a really long way.
Scott, how do you internally, when you're personally interested in, maybe it was Metaplane, what happens like after that? Like, how do you actually get something done? Because I imagine on a typical corp dev team, one person can't just say like we're doing this and then it just happens, right? So what's that like buying process, if you will? And I know Datadog does things a bit differently from a corp dev perspective, just in terms of, I think it's more, sort of product focused maybe than transaction focused. And so, yeah, how does that work in your world versus, what you've seen in other, peers in corp dev?
Yeah, we've got, I think, a pretty unique setup here. So, we to start with, like, the team, when we hire people with technical backgrounds, people are product people. In almost all cases, they've never done M&A before, but they've maybe been a CS major that was a PM for a bit. Maybe they got some exposure to finance, but they're not necessarily trained corp dev people. Because what we expect is, like, we're really actively understanding what these companies do, how they compare versus competitors, what are the key features that we actually want folks to build. So we come in with a pretty well-informed perspective on that. Maybe if not in the initial conversation, pretty quickly thereafter. We also have now 3 engineers on the team dedicated to corp dev exclusively, who are getting into the technical details, setting up a POC for the companies we're most interested in, really try the product, have a point of view on what might be interesting there, recording demos, and then bringing in some of the subject matter experts from the relevant teams to come and look. So, from that, usually the process, something like I have an initial call with the founder. I've been here long enough to have a point of view on whether it might fit. The next call is a demo with the relevant product leader. And if the excitement continues from that point, and we'll have like maybe one of the corp dev engineers on the call as well. Then we're getting into greater detail on trying the product, having that point of view, that we can develop. And every 2 weeks, like, we catch up with all the product and engineering leaders in a corp dev biweekly, and we're socializing that opportunity all the way up to the CEO, so that they're starting to get educated on the company, and we're kind of collecting all the information, the learnings, the thinking, and sharing that usually ahead of those types of conversations, so that everybody's informed about what's exciting, what's interesting, and then has the opportunity to ask us questions that we can go and seek out answers to.
Jeremy, for you internally going through the process, we talked about that sprint and kind of the features that you were really pushing with the team to get shipped. How did you manage the communication internally? Like, when's the right time to tell the team, like, hey, actually, the reason we did all this is because Bill.com wants to acquire us? Like, or did you tell them up front? How did that work for, an engineering team where, I would just imagine, maybe those folks are not necessarily super familiar with like how M&As work and have maybe not gone through those processes.
Sure. I'm always trying to be mindful of setting the right tone and being transparent as far as I can be without setting the wrong tone, right? And so, with this situation, there was a potential of just a business engagement, right? Just hey, you know, how do we create a partnership of some sort here? And so that's really where I lean is, Bill has X number of customers. Imagine if our number of customers in our system were to 100x. Like, this is the kind of opportunity we're talking about here. Let's make this happen. Right. And so there was absolutely that excitement from the team because, the whole team, every customer that signed up, there was a Slack channel. It pinged everybody. Boom, new subscription. Boom, new subscription. And I'm like, imagine that channel going off every 3 seconds, right? These are the types of opportunities we have here. Let's really make this happen. But, talking about, hey, this could be a potential M&A play. What kind of anxieties could you be, building in somebody? Or what kind of, imagine if it didn't end up going that way and you had somebody's expectations inappropriately set. And then you're like, oh, yeah, no, it went well, but we're going to do this instead. That could feel like they've either failed or they missed out on something. And so really it was more, hey, here's an opportunity. Yes, there's another opportunity on the table, but we'll worry about that later. I won't necessarily bring that up at that time.
Kevin was nodding violently in agreement while you were saying that. So Kevin might jump in, and I think you probably have some strong opinions on this.
I think Jeremy said it very well, trying to be as transparent and principled as possible, but knowing that not everyone can be let into the tent all at once. Right? What happens if the tent collapses? I don't think there is one right decision. But that everyone's team is different, everyone's relationship with their team is different. I have confidence in that the people here, like at the point of making the decision, will make the right one. It's a relationship question, I feel, as much as it is a governance one.
And Scott, so we talked about a lot about how deals get done, right? We have two founders here who have exited. Those deals clearly got done. What are some things that maybe you wouldn't know that could just like totally derail a deal? Like maybe things are going great, and then to Kevin's point, the tent falls in. Like what makes the tent fall in a corp dev context?
Yeah, it's usually a couple things. I mean, it's certainly anything that we isn't what the way it was represented, right? So there's if we find we just lack trust in the founders, where they talk about either um, business, how the business is performed, maybe they've hid key information, anything along those lines, anything that feels like deception, obviously is just, like in any other human interaction, you want to make sure you can trust the people you're going to be interacting with going forward. I think it's especially true in M&A. So, I think Kevin and team were great about, hey, here are the things that you should know that, maybe not the best possible things, but are just, things you should be aware of. And it's much better to know those things up front and then sort of find them out later because most of that stuff does end up surfacing at some point. That's one. Others just like the interactions with the team, right? Like inevitably, some of this stuff can be very tricky to navigate. You're obviously going to, as Kevin did, negotiate on behalf of not just the company and himself, but the team, and trying to figure out how to make those things work. But really spend the time to think about, these are people you're going to be working with and for. It matters a little bit less than directly in corp dev, of course, right? But especially when you're interacting with those product and engineering teams that you're going to be part of, really just recognizing that these are people you're going to be working with for quite a while, and the way you represent yourself in front of them is being monitored extremely closely, and they're trying to project out what it's going to be like working with you over the next several years. And that can be both on just interpersonal interactions and all that, but also things like, what's your motivation? How excited are you about joining this particular new company? Are you really motivated to continue to work hard over not just the first 6 months or a year, but beyond? Those things all are being heavily scrutinized, and I think it's important to think about how you show up for those conversations.
Jeremy, throughout your process with Bill, what were the places where you kind of got pulled in? Obviously, there was the kind of the feature stuff that you mentioned, right? But I imagine there were key points in the process where your co-founder, the CEO, who I think sounds like was kind of leading those discussions, would pull you in specifically, like, hey, I need your input on X. What are those kind of situations? And are there any pieces of that where you feel like, hey, maybe I wish I could have gone a little bit deeper on this piece of it, or hey, we didn't talk about this other thing, but ideally we would have if we go and start a company together and sell it again. I'm curious if there's anything in that realm for you that came up.
I think as soon as there was a potential, you know, I was pulled into the know, right? We had a very strong trust circle with the three of us, and so we were all on all the calls as soon as they got moving after those initial, phone conversations. Um, and I think where a lot of things fell on me very heavily was obviously, due diligence on tech, right? Like, what's your tech stack? How is everything configured? What's your security position? What's, everything that you would need to know to really understand, am I taking on an asset or am I taking on a liability? That was where a lot of my time was spent, um, you know, coming up with or finding documentation on those aspects. But also, I was consistently analyzing the behavior of our customers and, all of our data so that we could make more informed decisions on product direction. And so there were a number of times where certain questions were asked that I had it off the top of my head, whereas the others would have to go search for those questions. And so, you know, I think it came down to my area of responsibility and then just knowing exactly who was, you know, who was taking point on what and who would be the best tool for the job for a specific conversation.
Got it. So if you think about, Scott has a team, right? And they're working on diligence, et cetera. You almost have like a similar type of setup internally where there's each founder in a way is responsible for kind of a certain piece of the puzzle when it comes to working with a potential acquirer.
That's right. And especially, when you are a very small company, you don't have the resources to spread around. And so, really being tight on, dividing and conquering and fully trusting that each area is covered, I think is the only way to go. You have to have that level of trust and confidence in, the people around you to be able to split it up.
I am looking in the chat window and I see our friend Dennis, who has a question about bankers. And I think this really applies to the founders as well as Scott, even though I think the question was directed to Scott. So, what are some of the biggest do's and don'ts for when you're getting inbound outreach from VCs or bankers? But maybe we just focus on bankers for now.
Yeah, I mean, we obviously hear a lot from bankers. I'm always appreciative when they're pretty transparent on the company we're talking about. I can kind of quickly assess the potential fit for Datadog. We certainly have like a very specific way of looking at things and specific priorities that we're trying to really zero in on at any given time. So I tend to appreciate when they're transparent about which company we're talking about, so I can quickly get to, is this a fit or not, before taking much time on a conversation. So that tends to be like I guess a do for me. I will, I don't, it's very difficult to get your head around some of these technical companies if as an investment banker, especially if you don't, come from a technical background, which in most cases is not going to be the case. But the extent that you can even work with the founders of those companies to really try to do what I said earlier, which is like understand amongst this list of potential buyers, where is there a possible fit? Because it's very easy to quickly dismiss something that on the surface doesn't seem like it's well aligned. You can kind of even have an initial thought around of where that might why in our case Datadog might be most interested in the company. That tends to be super helpful. I think the VCs are tend to be a little bit better in this dimension. I think if you invest a lot in technical companies, you tend to develop some understanding there. A lot of those folks these days do come out of technical backgrounds to begin with. So I see that a bit more there. But that's probably the main thing is just you know, within within reason, try to be at least a little bit transparent about the situation and the company, and help us a little bit understand where there might be a fit if it's not super obvious.
And in terms of those priorities, how transparent are corp dev teams, including yours, able to be around that? Like literally, if someone asks you on the street, "Hey, what are the top five M&A priorities?" Is it that simple? It's like here they are.
Yeah, I talk to investors all the time about what's interesting to us, because that's how it's a one very helpful way to source interesting potential companies to acquire, or at least have a conversation with or invest in our case, because we also invest in companies. So I do talk about areas of interest. A lot of times those are not fully fleshed out, like, hey, we're absolutely going to go, build or buy here. But they are areas that we're spending time in trying to understand better. And the best way for us to understand them really is to talk to companies. And these days these new companies can emerge really, really quickly. And we want to make sure they're on our radar as early as possible. So we're pretty transparent about that with bankers too, and definitely with VCs that we talk to regularly.
SWAT in the chat has a question, which I think Kevin maybe is a good one for you. So, because I think you spent, I think it sounds like end to end from first contact to acquisition about 2 years, if I got that right with Datadog. So once that seed was sort of planted, when they had reached out, um, how did you handle like sort of roadmap stuff with your team in terms of like, hey, here's some features that are focused on certain customer problems? Yeah, some of those maybe overlap with some of the interests of, say, a Datadog, right? But at the same time, you don't want to build like for Datadog, I don't think, or maybe you do. You tell us. But the question is really about like, how do you manage that? That it could even be a conflict, I guess, within a team where maybe everyone wants to be heads down a certain direction. But you're like, hey, I need to hedge a little. I need to make sure we're building some stuff that could allow us to snap in somewhere else.
At least on the product roadmap side, for us, we oriented entirely around what solves problems for our customers. Uh, as a result, you get more traction and better reputation in the market. And I don't want to speak for Scott, but I don't know if you'd want to acquire a company that, is oriented towards something else. But I don't want to dismiss SWAT's question about the potential conflicts, which I feel like maybe runs a little bit deeper than the roadmap question. It's like when a couple is arguing about washing the dishes, is it really about washing the dishes? Right. And we can talk about that, but Scott, I'm curious what you're about to say.
No, I mean, you're right that we want folks who are focused on the right things, building for customers. And also we've definitely had situations where it felt like maybe this particular company was doing a certain set of things just to get an acquisition specifically from Datadog in many cases done. And that tends to be a turnoff. Again, like it's great to be thoughtful about different things. And I don't think, Jeremy, the 2 week sprint is what we're talking about here, right? Like that type of exercise makes sense. And plus there was a partnership angle there as well. But if you're sort of like just trying to manufacture an outcome, in a very sort of like short-term oriented way, that's not in furtherance of the business, that can be somewhat concerning, even because at the end of the day we want to build long-term value together. So thinking about how that should come together is great. Spending 3 months going down a path to satisfy an acquirer that may ultimately not be interested, priorities might change even if they were interested 3 months earlier, I think is a recipe for a lot of challenges down the road.
Yeah, well, and I'd love to jump in on this one as well. Um, just because, just elements of the question, getting to bigger funding rounds. Um, and we're looking at a series of features and you're getting into disagreements. I mean, because whenever you have passionate people in a room, which you should have in, a small company, how are you going to get anywhere if you're not passionate? There's going to be disagreements about priorities, about, direction, those types of things. And coming back to the washing the dishes analogy, it's like you kind of have to break down, well, what are we actually disagreeing about here? And what are the principles that we need to call out as our guiding light, right? Like, let's say there's two different options, right? One set of features is really going to drive towards your current core ICP. And maybe there's another set of features that are going to drive towards maybe an upmarket play where you can start pushing your average revenue per user up, which then side effect, maybe a bigger funding round because now you're bringing in higher value customers. Well, it comes down to, well, what's the strategy, right? Are we doubling down on our core? Is our core fully, shored up? Or are we distracting ourselves by heading in this direction purely to see if we can get an outcome that's more of a selfish outcome, right? The way I look at things is like if your principle is do for your customers and you incrementally start pushing up market, that's great, but you can't, you know, abandon your core, right? And so there were a couple of disagreements we had where we just kind of, okay, let's break it down. Like, what is our goal? Okay, does this feature set or this feature set align with this specified goal? And is this goal correct, right? And so that's really kind of what it comes down to is digging into the heart of the disagreement and coming back to your customer focus. And, doing right by the customer tends to do right for the company in the long run.
That's fantastic perspective. Uh, Kevin, once you got in the door at Datadog, once the acquisition was done, is there anything you would have maybe approached differently in that previous 2 years beforehand? And it could be from any perspective. It could be from a product perspective. It could be from a team perspective. Obviously hindsight is 2020, but I'm curious, like day one, day two, day seven, sort of in those early days, you're like, hey, maybe we should have done it this way or done this other thing, or I'd love to hear any thoughts you have there.
Well, okay, I'll be the first to say that, we say that we're both sides of the table. I would say that this is actually a three-sided table, right? There's the two partners getting married, and then there's the corp dev who's both the matchmaker and the officiant. And so I would say that we before the acquisition underrated how important the people we're working with at Datadog would be. I think we emphasize it a lot, and yet we still underrated it. I would say, looking back on the past 8 months, that almost nothing matters compared to the fact that the people who we're working with also have startup backgrounds, and we get along personally. That is almost all of both the day-to-day, uh, like the day-to-day working here, and I think the determinants of the long-term success. Uh, It's tricky though, because I feel like during the acquisition process, there can't be too much contact between the two parties, right? I would have loved to come over and like hang out for weeks, but it's a little bit difficult to make that happen. But I would have loved to go back in time and emphasize that more. In a way, we got lucky, but we're also still a little bit in the honeymoon phase. And Jeremy is, you know, okay, I'm not trying to make this, overweigh the analogy, but Jeremy, you've been at Bill for a couple of years, right?
Yeah,
Um,
yeah. And honestly, so it's partially just the way I look at life, but I don't think I would have done anything differently. And at least from a pre-acquisition stage, because we did the best that we knew at the time. And, the core values that we were focusing on was customers, employees, and the best long-term outcome for the product that we built. And from that vantage point, we absolutely did all of that. And so I'm very happy with that. Now, I definitely underestimated the kind of culture shock of a very small, cohesive team that talks together every single day versus, an org structure with thousands of people that you now need to understand how to traverse that org and who to go to for this and who to go to for that. But I mean, that's not something that you'll get into until you're in the company, entrenched and figuring things out anyway. So from a, looking back, no, I think everything went the way it needed to.
Well, I think that is a perfect ending point. Manali, if you want to just quickly pull up on the screen the final slide there. I wanted to first of all say thank you to Jeremy, the Bill.com team. Scott, it was awesome to be able to do this with you. It's been yeah, a long time coming, so really excited about it. And Kevin, thanks for also being a part of this. Again, really unique to have the perspective of acquired and acquirer sort of in the same room and sharing some of those experiences. So very, very excited to be able to do that. We will be sharing recording and sort of a wrap-up post. If you're here, you'll be getting that shortly, and we'll share that out. And again, thank you so much. Really appreciated the time. We're going to be picking up next year with our virtual event series as well. And hope you have an awesome, awesome day, awesome week, and a great holiday season. Thank you so much.